Hello, this is Anton Höpfel for Manapa Trading. This is the recap for today's Bund session. It's Monday, October the 28th, and let's have a look on the market behavior so far. We have since Thursday in Bund a situation that the Bund crossed the long-term value completely to the downside. You can see this here when Thursday they try to get above the long-term volume here into the lower volume areas. We see here a strong high on daily basis. And that means that they reject this area already here at the LVN, did not go above and testing the next epoch. No, they go just here. We see that they cross it completely here till Friday night session from here to the other side. We see here some support areas in this overall range created yesterday, last week, and we see we have some stronger lows here at this area, and also then stopping here immediately once reaching the areas again, the distribution, the lower. So that means yet it was so far a area of support. Needed to be watched closely then if they have the ability to get into here. We can see maybe if we see it, then we have a good opportunity that prices go lower. Significant have then even can go to the 97 or to the 82 area. We'll see the longer term VPOCs here. All right, and the other side here, the price in the overnight was not yet proven with higher volume, but accumulation started here with the early pre-market today, Monday, so that we have a area around the 171.12 where we saw accumulation and testing this volume edge from the last trading day. So that means if prices staying here accumulate and with pressure into this area, we have the chance that we going back and testing yesterday's PUCs, which are also clustered with the overall composite profile here at this area 40 and 52. If not, this is the responsive selling area. This is, as I said, the area of where we look for initiative selling to get to target 1, 2, and then 3. And if we see on the other side, buying increases at the top, got absorbed, or just buying immediately from the at the moment PSC here away, we have the chances to get into this distribution and overall VPOCs here at this area. So that means hypo range short 171.33. This is for the short level from the range side. That means responsive selling for the cheapest entry for the short hypo. Means not the cheapest, but more confirmed for a getting into the intraday momentum traders play short. That we what we wanted to see would be the strong selling initiative towards the 172.12 for targets 03, 170, 97, 170, 82. And if they are more confident on the buy side, and if you see strong buying towards the 33 area, we want to go here for targets 40. If buying power continues even above this POC from the composite, let's go even for the 50. So that's for the moment. So remember our hypos. What is happening here? What we see is with the phase before the open, here it's right 8 o'clock 44, this picture here. You see, I marked this as a kind of open test drive level here, this red and green line here. This is separation like a list, but this is only for my responsive thinking. That means if you see more responsive behavior, which is shown to us by first, excuse me, which is shown to us by footprint, or if you use delta just here as a graphical candlestick chart, we go here and search for a responsive entry, for my the cheapest price for the continuation for a short. That means this would be our open test drive short level. And on the other side, if you don't see more responsiveness, but more people, big buying candle, at least trying to extend this and staying in control with the pullback, or if you get an earlier entry, because most of the time or always
they trade away with initiative from the actual PUC. You can even try to get in if the structure and the delta is very bullish before they break the wall. So before they break the high of technical chart here of the pre-market. What was happening? Interesting thing which you can see here. The delta is not overall increasing. That means you don't see any, let's say, outstanding bigger than usual here created delta. This is not a sign here to say, but you see here delta buying. Yeah, but this is a minor numbers. That means what we want to see is that compared to overall candles, if you just want to have the quick check in delta, should be a really big, massive candle. That means a candle that at least looks like, let's say, a candle at least like this here, but maybe one or two. And this is cannot be seen here. What we do see instead is that we of course getting here a little bit higher, as this was the high so far at this moment, 824, when I made my preparation. And you remember my level I named 170.133. You see that they can make it above at this very moment here by one tick. And then you see immediately after this happens responsive selling signs. And what a responsive selling would look like is this what we see here. The delta structure shows us number one. Here a stick on this candle. That means we have, let's say, some bearish rejection already here. All right. So that means people are switching here from obvious buying, more market buy orders, to net more selling. That means we see at this area where we don't want to see this behavior for getting into a long then. We don't see this. We go more with my hypo here. This is the open test drive rejection. And if I handle this and trade the short, this is what you're waiting for. First, no big initiative on the buy side, copy, right? And then when we reach in this area, weakness. What you also then see here is that overall, as long as price is staying here at this area, so this has actually happened from here to here, delta at this very moment is weakening. That means the next test here, what is happening here, obviously at this candle, the test here of the up doesn't go even to the upside, but you see in delta, when they testing at this moment and going again, trying to get again, the trapped buyers cannot make it even to this top area here again. So this is a delta divergence that shows us it's just a weak attempt. It's not even a serious attempt of trapping buyers here. So there's no algorithm to blame or another trader that want to fish liquidity. This is just, I would say, just a common situation where people see price advertises higher and volume confirms here we staying in this area, because time is only a short period before you see we're getting weak. It's immediately starting after getting above. So everything is, let's say, with my hypo number, range short 1. This is not be played for. I haven't played this because it was in the pre-market, but we just want to see and understand from order flow what is then happening, because we want to see and understand to be able now or later to play then one of my prepared hypos. This is what you should do as well. When you have your hypo for, let's say, some other area and say price is tested this, what kind of behavior do you want to see? And let's say see what is happening. First, responsive selling signs, right? Second, the short side is coming in now more prominent than before and longer. Why do I say this? Well, you see this here, that we have no continuation here of buying. It's only a little streak, it's only little waves, typical here, weaker pre-market volume. But here you can see we have from the distance in delta, or let's say from the time, continuing selling, more market selling orders. compared to the other periods here of buying or selling, doesn't care, is the longest yet. We are now in a situation, market region, it's at the moment pre-market POC, and we see, boom, now a candle, what I want to see, for example, to rate it, at least as interesting bears are going here and marking a fair first area of, let's say, bearish protection. Why protection? If you play this area here, and you don't have to, I'm just telling you what you look for, and you see we are at the pre-market POC. We have made it above the structure. That means also not to this longer term POCs or also the yesterday, last trading day POC, but see responsiveness and selling even before this area. Getting now at this area from the POC, which was yet the fair price agreement, at least for this area, for this time here, and seeing now reaching this area and initiative selling coming in. And for the pre-market, let's say worth to speak about, because when we look at the numbers here at the footprint, we see 566 contracts sold here into the bid. All right, so that means you want to see this kind of behavior to understand that if price is now pulling back to this area and making boom, buying, that this was just advertising and failing and getting back to this agreement area, to this balanced zone. But if not, this is then the moment where you have to think when you go and look later then for my other hypo, my hypo number 2. You have already some kind of, let's say, pre-confirmation that they are a willingness here to play the short as they trade away from the at the moment value after seeing in context what happened in the big picture. All right, look what is price doing to understand. We see the initiative of sellers away from the pre-market POC. A little bit pulling back with the second and the third, even 600 contracts now buying into this area. But the funny thing is at 171.26, this is this level here, and we guys talking of pre-market. This positions mostly got absorbed. That means buying of 600 in this area did not lead to a price move to the upside. But already immediately within this period of 30 seconds, you see sellers are coming in again. Not big pushing selling, but at least continuing a information of, all right, 600 but no coming above, and selling, confirming, starting again. Now the second big candle, about 400 got sold into this area on major 2 price levels, 23 and 22 here. That means we're in this area now where we can expect short-term money on the short side is in the books, right? The bearish control level, which I always mark with the area where the initiative in context here from the POC is coming and trading away here to the downside. And then the continuation. See what is happening. All right. Overall, we stay bearish. We know confident situation if you put a lot of money into this area here and here, because you're not, let's say, in danger, short-term trader, to get stopped out unless price is coming here and going above. Then you may say, okay, here, this is my stop. But as long as they trade now here, everything of the bear side is under control. This is why I leave here this rectangle to show you where is the scenario, what is the situation. Because what would you do if price now coming here or here or here? Would you be really nervous? No. You got your money here already with initiative number 1 and 2 and quite comfortable. This can also become a range and everything is under control. Let's see what is happening. Selling is still here. And now watch what is happening at 8:43. We are here at this area when I said pre-market 171.12 is my area where I am looking for initiative of selling hitting this area. As this started already from far above to this area, we want to see now more continuation as I want to see new selling money is coming in here. Right now we have a short-term intro of, let's say, balance. And the people you see are trying to break this structure. We see here a short balanced agreement. Shorts again are in control, bears in control, it's intraday money, but you see that people starting to buy higher and higher and higher. Prices does not go higher. This was a good attempt, money getting out, people got trapped here. The first means passive selling continues. What does it mean? Is this the sign what you want to see when you look now? And this, you see why I haven't prepared this, because we are below yesterday value. I'm more looking here for a range short entry and then continuation, or only long if you don't see responsiveness behavior and confirmation with strong buying. But it's not here no matter what below this value after crossing the hole and are in this interesting area. When this is breaking, gives us a good opportunity for a move. For no dime I will look here for the long. But you see, people intraday, of course, are looking and seeing some kind of responsiveness behavior you obviously want to see. This is right. All right? This is okay. So that means, let's go on the other side and say you're playing and seeing, okay, well, Anton, you just told me here what responsiveness looking like. Isn't this kind of the same? I would say technically yes, but in context no. And then let's see how it develops. First, look at this move here to the upside. First, do you see here a lot of buying initiative on this whole time, no. So this short trade here, or even if you got stopped because you haven't waited for the level to be reached and say I'm trading it then here when it breaks, this is not, let's say, under the pressure of already invested long money in the books, right? I mean, look at Delta. But in this case, we have short money in the books. You would be stupid then to say, well, this is the same situation. Technically, only if you look only at this small window, then yes. Here is responsiveness in buying, and technically, at this moment, at this area, when we say we're reaching now the high, yes, this is responsiveness in selling here also. But you have to then you have to recognize that this is different because here's no buying money. First, this is then on your side if you want to trade the short. And second thing is, if you see this kind of behavior and then prices don't react, that means prices stay here and don't go lower. Even the delta shows us responsiveness selling. What can this mean then? Of course, that means absorption. And this will be then a reason to get your stop tighter, because you better than got stopped out when prices getting back to this area, because the opportunity for traders now trading momentum, at least intraday, is quite high, right? What you see here is then, if you say, all right, this is my level for the long, it's okay, whatever it may be, and it's just prepared, and you say you trust your big pick, all right, do this. You get here cheap entry, seeing this. And now you see, wow, not only responsive buying, but more buying. But please take a look here. What will your stop right? What would be your stop? Your stop still be right here, maybe? Yeah, really necessary to have the stop so far when you see this kind of behavior? Think of it. Have a look and backtest these scenarios, because I would say what I see here is, right, responsive buying signs, open up maybe your long, which I didn't even prepared, I told you in the big picture preparation. I see this kind of behavior and I see this is absorption. People trying to get out and even trying to maybe some getting longs. Price didn't move. Price didn't move out of the structure. Yeah, okay, we can say it moves one tick because this was the agreement for the moment when you make your decision. This was the high, this was the low. We stay here, then get with one tick higher, all right. But overall, see that they are trapped now, people getting out of the position, and the most important thing is it's now 8:57. People got here, maybe stopped out, getting off position. We have some liquidity even protecting us at the 11 level, and boom, more money is coming in. 500 and 300. So right around about 800, 900 contracts sold into the level 11 and 10. There are of course some people who stopped out, getting out here, but also you see they were trapped. And this is now the next situation. We see money is coming in passive in this scenario. That means bear at this very moment were able to control to get lower by passive selling. People now are at the open phase and we see boom, responsiveness at this break level is coming in again. So this is the moment where you have to understand this is now where prices are more likely to test to go lower. I say not more likely to go lower, but more likely the behavior of the participants more to see to test the low. And again, people for what reason ever maybe getting out and taking out of this nice short-term intraday profits, but also trying to get maybe onto longs. And now you see boom, money is coming in and a lot of positions hitting the a bit. And we see in a vacuum also in the bit, nobody is blocking anymore here. See the 07 level, the 06 and the 05. There were only 69, 24, 55 contracts sold, but there was a vacuum in the liquidity in the bit because price was able to move 4 ticks by only, let's say, DAX kind of amount of money was sold into it. So we see maybe here people got stopped out and then more money is coming in at the very low of this candle. By reaching immediately my target number 1 area, short always in control. You see this, never were able the bulls to get out and make here the range long, wasn't able after the open, more money getting out, breaking the structure. So all time, then reaching immediately after 30 seconds here when pulling back my target number 2. This is this bigger PUC from a PUC, let's say from the composite, that we see some pulling around this area and no more money was coming in and then reaching also the target area number 3, which was obviously very important area because this was then the last area where I expected so my target, because it was kind of an excess already here the days before. You see this here, that we have some stronger low created here at the 17th of October. That was a Thursday, and this is, let's say, the composite profile low before you see this green rectangle here. This is marks the beginning of the low volume node, and so that means we have this area here, and we also have our PUCs, which are also clustered with the Monday here and this area, and we see the rejection here at this area at a let's call it a unfair low in the composite. So this was for me the moment why I said this is my target 1, 2, and 3, and so far this was what happened here. And let's see how market then behaves. For me, this trading was over. I was able to get into the this short trade with a entry before breaking with this break of the structure here. I show you. With the break of the structure means I was able to get here with this break, accumulation, absorption of sellers. That means I wanted to see that they stay here in control after the open, and I was able here to get in with the break here around this area here before reaching overnight low, and then reaching my target 1 was then switched from T1 to T2, of course, because market pressure already put prices so far below. So this means this was my target here, and for the longer contracts or for the bigger contracts, for the home run opportunity, one could have stayed without pressure into this trade, because price, you see this even with the pullback, didn't even got above your target. you first. That means you were prominent, very comfortable with a +7, 8 ticks from your entry area here, and well, it didn't cost a lot of nerve, I would say, to stay in this position then if you trade more. What did we see then? All right, what we saw then was that the delta showed more signs of willingness of ending the scenario here and rejecting that. What means at this moment you could see at this here where we're about to build an excess on the downside in the bigger picture. Very important because this was our POC level. And if we look here at my TPO chart where you can see more detailed the bigger picture, you see what we reached here at this moment when we traded this. We went through this area where I said we had the stronger highs, stronger lows here created. And the moment when we went through, we had a good opportunity to now testing the last agreement, the last VPOX, and this was built from the scenario here from the starting from the middle October. This is more a newer line. You see this coming from this October composite, while this line here is coming from the older September composite profile. No, this is even older. It's the July, when the prices were so low the last time. Anyway, important was that this area failed to be protected any longer, even it was a finished strong distribution here. But once you see that they stick in here like glue and can't get above anymore, which obviously here happened then with the morning pre-market phase. You see this rejection now of this POC area. And what we see then here was, I didn't know, will they end then at this POC already? This is why it was my more important target 1 and 2, and this then only was target 3, because we didn't know so at this moment. How far will they go? The opportunity with my spoken entry with the range short here or the pullback, and then again with pressure down to this 12th area here. I only knew that we have a good risk reward opportunity here coming from reward perspective to this area. I didn't know, of course, if we really get to this here. Anyway, I knew what to do then, or to understand what will happen if they reject this area, becoming here again an excess. As you see, this was the last possible area of the composite profile from October to be, let's say, agreed as balance, overall, agreed as the value, the fair prices, even with this little, smaller volume which was created from this and this days. That was 17th, and then the area 21, 22nd. So important was just to understand that this is the area where we want to see prices going here, and then you could have made a decision to say, all right, if this is happening now, and this was the candle, when we were looking, there was of course also the opportunity now to play the reversal. I saw one member here in the group here from our mentoring group. It played it very good, as I could see, because he determines this area. If we see this kind of excess, let's see if delta or footprint tells us to get here into the reversal then with the break of the structure, to get opportunity to get again from the last bullish control level, which obviously you see here, starting here with the pullback. So that means if we get above this PSC, is there opportunity to get then above and play it to the breakout area, to the today's, let's say, open range again, to the 10, 12, 14 area. And he played it very good. And I think that's something you can also plan to play. If you have the bigger picture levels that are important and you see this kind of excess, marking this as a starting opportunity, if more buyers coming in now and breaking and getting back above this area, which was a bearish control, to say, let's say, refill this lower volume node from the break to get up again to this area. This gives you a good opportunity and see what's happening. First, you see this held. The pullback held, attracted sellers coming in. But even a more prominent excess then appeared here. So that means in intraday perspective, understand what an excess means. We're at this value created so far from this break and from the imbalanced phase from the morning break to the downside. Then we see first signs of rejection. That means exhausted place. That means taken out the wins, and this led to this kind of move. A second try, let's say it reshort, on a, at this moment, just exhaustion caused move. But here you see now the first beginning here of a more stronger low, at least in the small picture so far, which can then even become a more strong low when they can handle it, that prices cannot go here below, go to this area later. But for the moment, this was the microstructure a strong low. Delta now shows us the second attempt was with a lot of money and good. People now have to go out. And what you want to see is now, when you see overall this structure here from the delta, and seeing this was the moment when money was invested again, sell side, sell imbalance, we want to see when they break in this high so far, we want to see that when they break it, if they break it, we want to see with a lot of volume, boom, starting to happen here. And now you want to see as they pull back, no more selling is coming in here. So what you don't want to see is, this is what you not want to see is that selling is coming here again. And Delta shows us already some more interested here in the buy side once price got above. And that's the moment, boom, when you can say, right, this is the moment, the more aggressive entry will be then here at this area now with the move, and to go up again to the break area. So let's say a 10 tick move, when I would say also here on the stop would be then around here the 96, 97 level. So that means about 5 tick stop, 5 tick reward opportunity with the more aggressive entry, all right? Going here to the open range again. Buy control, this was the level 12, yeah. So see what is happening. The prices then didn't even test the second time, they tested already here in this moment. You see, not a super sign here, not super bullish, but it was enough to agree with the other participants to say, all right, this failed, we have an excess, we going out, we're trying here again, excess, a little bit trying, failed already. Delta is not showing us the pressure we have seen so far. Even with this phase here again, you missed this now. See this here, you missed this here, right? And then you see this very interesting, taking out the structure high here at this moment, 9 o'clock 35, getting above, pulling back, and then boom, initiative. So you could have handled this already with a passive entry around this area. So getting above with volume, pulling back, waiting for at least a little bit responsive buying. This was happening 937. Could give you a passive entry around this area, 97, 98. Or you wait then for the initiative. So that's how you could play it. And when I look at here at our, yeah, I think he played it this way. Yes. All right, so this was my day. For me, just my Hypo 2 trade, not my Hypo 1, because the responsive selling started here before the open, which is obviously most of the time, if you follow me, happening. But there was a good second opportunity here with the Hypo 2 to get at least to your target 2 then, as prices was in control of the bears. And the other opportunity was, as you see, excess on the downside at a very prominent area from the longer term composite PSC rejection, played along the reversal to the breaking area where the bears at the open phase started to mark their area where they played the more intraday short money. Yeah, that's it so far. Thanks for watching. Anton Höpfel for Manapa. Bye bye.